Okay, we're going to do chapter 12, lesson or application problem number 8. And this is talking about after-tax effects of a corporation and salary on an individual taxpayer. So, Mr. Lyon, who is in the 35% tax bracket, is the sole shareholder of Toto, which manufactures greeting cards. Total's average annual net profit before deduction of Mr. Lyon's salary is $200,000. For each of the following cases, compute the income tax burden on this profit. Ignore any payroll tax consequences. Okay, first of all, Mr. Lyon's salary is $100,000. Toto pays no dividends. So, we start off here with a net profit of $200,000. Okay, our salary, we're going to subtract because that is deductible for the corporation, giving me an after salary profit of $100,000. My income tax rate, I'm going to use the table, the corporate income tax table, which is on page 590. Okay, so on page 590, if I look at the tax burden for over 100,000, over 75,000, but not over 100,000, is we start with 13,750 plus our difference over that, so 25,000 times 0.34. So that covers the excess over, and we get a tax burden of $22,250. My net income, here I should probably put a minus here since we're going to do a subtraction. My net income for the company is, my net income for the company is $77,750. In the example, we have no dividends, so we're going to have my personal income tax that I have to pay, $100,000. My taxes on that at a 35% tax rate is going to equal 0.35 times 100,000 is 35,000. So again, I need to do my minus there to make the math easy. And I sum up, and I have a balance of 65,000. My tax burden is going to be equal to my 22,250 I'm paying in taxes on the corporation, plus my 35,000 taxes I am paying individually. So my total tax burden is 57,250. Okay, 57,250. So in that example, if I have a corporation where I'm the sole shareholder, I have a $100,000 deductible salary. I'm paying taxes on my net profit, and then I want to pay taxes on my individual salary. So let's go to B. Mr. Lyon's salary is still $100,000, but Toto distributes its after-tax income as a dividend. Okay, so we're going to have the same scenario. We're going to have $200,000. We are going to subtract the $100,000 salary, giving us a after-tax profit of $100,000. My income taxes are going to be the same thing, so I'm going to have equals my 13,000, going by the table there, 13,750 I apologize for that. 13,750 plus the amount over that, so my 25,000 times the corporate tax rate at that rate is 0.34 parentheses, and oops, and still have my 22,250 as my income tax. My net taxable income at that point is 77,750. So my personal case is still the same, 100,000, and my taxes are 35,000. So I'm just going to type that in here. Calculate that in the first example. Then I have dividends of 77,750 since I took the money out of the corporation. Okay, so my tax burden on the dividends is going to be equal to that 15% tax rate times the 7750, so 11,663. My total tax burden is going to be equal to my 22,250, my 35,000, and my 11,663 dividends tax. So I have a total tax burden of $68,913. Okay, so let's go to Part C. Toto is an S Corp. Okay, so an S corporation. Mr. Lyon's salary is $100,000, and Toto makes no cash distributions. Remember, on an S corporation, it's basically a pass-through entity, so you're taxed at the individual's tax rate. So my net profit for Toto under an S corporation is my $200,000 net profit minus the salary of $100,000, giving me a total after salary of $100,000. I have zero taxes paid at the corporate level, so my net income is $100,000. Okay, that is going to carry over to his personal taxes. So I'm going to have the $100,000 from the S Corp plus the $100,000 from the salary. I have a total income then of $200,000. I'm taxed at my personal tax rate because I'm an S Corp. So I'm taking 35% times 200,000 profit. So my taxable burden, my income tax burden on my profit in this situation as an S Corp is $70,000. Okay, so then now let's look at example D. And so example D, Toto is an S corporation again. Mr. Lyon draws no salary and Toto makes no cash distributions. So we have no salary here. I have $200,000 worth of profit. I have no salary here on a personal level. My taxable income is $200,000. My total income is $200,000. Again, remember, an S corporation, it's not paid at the corporation level, it's paid at the individual income tax. So we're pulling that whole amount over. My individual rate is going to be equal to my 35% times my profit of $70,000. So I still have a taxable liability of $70,000, even though I took no cash distributions from the corporation. So that is kind of one thing. You don't have the cash out of there, but you're still going to have to pay the tax regardless of whether there's a cash distribution. So that leads us to E. Toto is an S corporation. Mr. Lyon draws no salary, and Toto makes no cash distributions on its income to Mr. Lyon. It's going to be exactly the same calculation in D. So we are going to have a $70,000 tax burden. Remember, again, it's a pass-through, so there's no taxable distribution at the or tax liability at the corporate level. It's just at the personal level. So again, the other thing to remember here is that there is tax deductions for personal, for Social Security income and that. So it's not quite realistic, but we're trying to eliminate that. The other thing to remember is if there's no taxable, no distributions of cash, then, okay, so we have no taxable distributions, but we still owe tax on the debt. So that is different scenarios under different setups of corporations.